One click. That's all it took to erase a billion-dollar empire. Not a global crash. Not a war. Just one decision, executed in less than a second. Welcome to Big Bucks, where money meets the unbelievable. He wasn't born into money. No trust fund, no famous last name. He started at the bottom. A windowless room, too many screens, and a chair that squeaked every time he leaned forward. He learned fast that finance rewards two things: timing and nerve. While others hunted for perfect certainty, he hunted for momentum. If the market blinked, he moved. If a graph hesitated, he didn't. He didn't just read price action, he felt it. And in a world where hesitation is expensive, speed felt like genius. The wins came early. Small at first, then larger. He placed the trades others wouldn't touch, and they paid. On paper, he looked like a risk taker. In his head, he was simply faster than fear. The desk talked. The street noticed. Money followed attention, and both followed him. With success came scale. Bigger lines, looser limits, access to leverage. He went from renting a tiny apartment to buying airspace. Penthouses, cars parked under marble ceilings, dinners where you signed more NDAs than receipts. He told himself he had earned it. In a way, he had. But empires built on speed almost never learn to slow down. The market is a machine that punishes pride invisibly at first, then all at once. Volatility crept higher. Liquidity thinned. Reports turned cautious. Hedge it. Cut it. Wait. He heard it all and called it noise. He wasn't reckless for the thrill. He was addicted to proof. Every win proved the last instinct right. Every instinct confirmed the identity he liked. The man who moves before the world does. The more he won, the fewer questions he asked. Confidence quietly replaced clarity. There were warnings he could have seen. Spreads widening before news. Correlations breaking down. Algos overreacting in microseconds and then overshooting again. A healthy desk reads those signals as breaks. He read them as chances. When others backed away from the edge, he saw an open lane. Risk, in simple words, stacks. A large position is risk. Leverage makes that risk taller. Thin liquidity removes the staircase back down. If direction flips, the fall isn't gentle. It's a trap door. He knew the math. But experience can be louder than math. It will bounce. It always has. The morning it happened didn't look special. Coffee, screens, the hum of servers, business as usual. He watched a setup he knew by heart. A level markets had respected. A reaction he had profited from a dozen times. If this popped, it would run. If it ran, he would own the move. He didn't whisper it, he believed it. He measured once. He didn't measure twice. He sized up beyond big and into no margin for error. He told himself size creates conviction. In reality, size deletes forgiveness. And then he did what he had done 1,000 times before. He clicked. For a breath, nothing. Then the screen didn't just move, it convulsed. Price slipped through the level like it wasn't there. A tiny gap became a hole. The hole became a slide. Liquidity vanished precisely where he needed it most. What should have been a bounce looked like a floor opening, he added. It's the oldest trap in the book. If the trade is wrong, make it larger so it can be right faster. But markets don't reward stubbornness, they multiply it. Every add-on cost more, moved less, and bled quicker. Now the position wasn't a trade. It was a fire. Phones started ringing. A broker. Then another. Risk pinged him. Compliance pinged risk. His P&L wasn't red, it was hemorrhaging. The market didn't care who he had been yesterday. It only cared what he was right now. Oversized, over-levered, and out of time. Then the feedback loop began. Algorithms detected pressure on his side and pressed back. Other desks smelled blood and stepped away from the bid. The space between sell and filled widened into a canyon. He wasn't trading against traders anymore. He was trading against physics. Margin called, first politely, then automatically. Pledges processed, collateral debited, lines reduced. He tried to flatten, but the exit he imagined wasn't an exit at all. It was a shredder. Every second he waited raised the price of leaving. Every second he acted printed a worse fill. The trapdoor had a lock. Within hours, the math turned absolute. Forced liquidation. His positions closed not at where he wanted, but where the market allowed. The system didn't ask his permission. It executed his consequences. Screens that once looked like a chessboard now looked like a power outage. Dark, empty, finished. The damage wasn't just a number. It was reputation. Investors who once chased his signature now avoided his name. Journalists who once called him visionary recycled a different word. Reckless. The lifestyle vanished at the speed it had arrived. Planes grounded. Doors closed. Friends quiet. It's tempting to frame this as a tragedy no one could predict. But that would be dishonest. The story wasn't about a bad market. It was about a bad process. Speed without clarity looks like confidence until the bill arrives. And in finance, the bill always arrives. Most people will never place a billion-dollar trade, but the lesson scales down. We take smaller versions of the same risk every day, ignoring what the numbers say because we like what our habit says. Adding to a losing position because it can't go lower. Calling leverage strategy when it's mostly hope. Money is movement. It flows toward structure and away from chaos. He had structure once. Rules, limits, second checks. He traded them for instinct, narrative, and willpower. Willpower is excellent for waking up at 5 a.m. It is terrible at negotiating with a market that doesn't know your name. What could have saved him wasn't genius. It was boring discipline. Size that respects liquidity. A stop that isn't theoretical. A risk cap that hurts ego more than equity. A second voice with authority to say no. The kind of habits that feel slow until the day they make you fast enough to survive. There's also a human truth here. Success edits memory. We remember the skill and forget the luck. We remember the exits we nailed and forget the times the market forgave us. We mistake being early for being right and being loud for being strong. Then one day, the market stops editing for us. He'll rebuild something. People do. The industry forgets almost everything except repeated sins. But the empire he lost teaches a cleaner lesson than any comeback ever will. One click can build. One click can destroy. Speed can make you rich and make you poor faster. Confidence can open doors and push you through windows. The difference between fortune and failure isn't size. It's clarity. Most of us won't gamble billions. But we gamble each time we skip the second check, ignore the small warning, or call a bet a strategy. You don't need a famous blow-up to pay a high price. Fees, debt, delays, and bad habits will invoice you quietly and collect loudly. Here's what it teaches us. In finance, clarity isn't luxury. It's survival. Because wealth without clarity is nothing. At the end, it's always about money and the price people pay for it. If you want more unbelievable money stories, subscribe and stay tuned.